In today's Property Insider Chat, Dr. Andrew Wilson and I discuss the latest Australian Bureau of Statistics housing approval figures, which show that there's just no way we're going to meet the housing targets the government set. In other words, we're going to have a housing shortage for quite some time, and also a rental shortage, and that's going to underpin property values. We also talk about retail trade and how our auctions coped with much larger number of properties going to auction over the weekend. If you want to keep up to date with what's happening in our housing markets, please subscribe to this YouTube channel and click the little bell icon so we can get you up to date each time a new show comes out. Australia's population grew by 2.3% to 27.1 million people in March, according to the latest figures by the Australian Bureau of Statistics. Our population actually grew by 300 people over the previous year, and net immigration drove about 83% of this population growth, while natural increase obviously drove the other 17%. Apparently, we had 509,800 people come to Australia as immigrants, down from the 559,000 the year before. But we're just not building enough accommodation for all these people. And to make matters worse, with more 1 and 2 people households, we actually need more dwellings just to house the same number of people. Yet the latest building approval figures give us no comfort that we're getting anywhere with our housing crisis. So in today's Property Insider Chat with Australia's leading housing economist, Dr. Andrew Wilson, Chief Economist of My Housing Market, I'd like to discuss these statistics and give you some more clarity on what's happening in our economy and our property markets. Hi, Andrew.
Yeah, good day, Michael. And we do have the latest ABS building approval data. It's a bit of the same old when we look at those monthly figures. We had a fall in the result over August. Overall building approvals for homes were down by 5.7%, and that followed a 5.7%. That followed a 10.4% rise over July. And again, it's the up and down nature of the unit series. We tend to get 1 month a big number of units coming into the system, which reflects a significant development being approved. And of course, it's not followed up the following month. So it's up, down, up, down. And that, of course, works its way into the total figures. But having said that, we're certainly starting to see a gradual improvement in the trend, but it is being driven by house approvals. So we're certainly seeing a revival in house approvals, really not much overall in terms of the trend for unit approvals. And last month, it was a question of Victoria being the top performer for building approvals, total homes, but they were down by 3%. So all the states were actually down, Michael, over the month. And Victoria was the best of the losers, I guess you could say. They were down by 3%. But we still see those annual growth levels recessed. But when we look at the longer term data, we can see that on the year to date, that houses are, that's the first 8 months of this year compared to the same period last year. Houses have actually increased by 8.1%, Michael, but units are down 8.5%. So that gives us an overall up by 2% for overall homes. And the full year on year data shows houses up 3.5%. But units down 13.4%. So it really is a question of units dragging the chain continuously. And even if we, as we discuss here, even if we get a revival in unit development, it's not really going to work its way into the system for a number of years, as it takes some time for unit developments to get out of the ground and then become livable housing. And it is the future, I guess, in terms of rebalancing our undersupply. It is all about units, Michael, rather than houses. And even though it's good to see that improving, and that's a good thing for the economy, that we're seeing more houses being built, but it's not really going to have certainly a shorter term effect on what's happening in our in our overall undersupply of housing. And look, when we look at the trends, the annual trends of national building approvals, we've tracked higher than the same month last year over the last couple of months. So that trend is moving upwards, the quarterly trend. But it is certainly being driven by an improvement in housing, because when we look at the trend for units, they're below where they were a year ago over August 2023, whereas houses are considerably higher. So it is a question of an improvement in houses, but not so much an improvement in units, which are continuing to track downwards. And when we look at
Well,
the
Andrew, it
breakdown,
actually is likely that it's because at least they can get houses up and out
yes.
built much more quickly and safely, and there's still margins in those. But currently, the construction cost, the supply constraints, the union issues, the fact that there were so many problems with quality before, so they've got to build them more carefully now, suggests that building new units is going to be much, much more expensive. And currently, the differential between what it would cost to build them and what established units are selling for is just too big to make it financially viable to take the risk for developers to build them. I guess that means that any established unit you're buying in a good location has got some really good intrinsic value built in. You can buy them substantially below the replacement cost.
Yeah, and with strong rental growth, Michael, it means the yields are high as well. And that's what's pulling a lot of investors into the market, this particularly established unit market. We know that from that ABS data, there's been a surge in investor activity over the past year, but high yields are a part of that, of course, as you said, that with rising rents and that a more, I guess, positive outcome in terms of the price differentials, that gives us higher yields. And I think also with units, as we keep saying, it is the restrictions for planning. If you think about it, the more demand that we get, or the more demand there is for unit development in our established cities, it's actually tougher to find development sites, because we're soaking up, the brownfield sites and the available sites because of high demand. So it means we have to really shift into those established areas to sort of continue to have the level of unit development that we've had. And of course, we know there are significant roadblocks to getting higher density development in established inner suburban middle ring suburbs, and state governments, and Victoria is one of them, certainly are now starting to really declare that that the appeals against higher development in some of these more established suburbs are now going to be offset, and the minister in Victoria is now going to be really the final voice in terms of whether an approval gets through. And that's just another attempt by the government to try to rebalance the undersupply of housing. And as I said, the Victorian government are looking at some of these more established suburbs, leafy inner middle ring suburbs in Melbourne, to say, well, look, you're going to have to put up with higher density there, because those restrictions, those planning restrictions, are really one of the key problems to us, finding more accessible housing in Melbourne.
And I guess they've got to build the sort of units that the marketplace wants. The last building boom we had, which was very much driven by foreign investors buying off the plan, built, I guess, the sort of apartments that one wouldn't want to necessarily live in. They were built more to sell to investors, and some of them unsuspecting investors. But there definitely is a market for family-friendly units, millennials who want to be in closer to town but moving to family formation age, right sizes who don't need as big a home as well. So smart developers, if they find a good niche, there's a market out there.
Yeah, when we look at the breakdown, the latest breakdown on capital city home approvals, Melbourne, as usual, clearly the leader over this year to August, up well ahead in terms of total homes approved. I think it's interesting when we do look at the breakdown that both Perth and Brisbane are now approving significantly more houses than Sydney, Michael, which is, given the disparity in the size of the capitals of Sydney versus Perth and Brisbane, to see that unit development is roaring ahead in Brisbane and Perth and well ahead of Sydney, just shows that not just the constraints there, but the nature of development differentials between the capital cities. And Melbourne's continuing to approve the most units as well, and typically Sydney's the capital city with the most unit development, the most unit approvals, but Melbourne's this year so far is well ahead of Sydney in terms of unit development. But Melbourne has approved double the number of houses this year, Michael, compared to Sydney. So good news.
We always mention, of course, Andrew, that just because they're approved doesn't mean they get built. I guess houses are more likely to get built with the approvals, while apartments, the developer then has to go through the stage of selling off the plan to get their finance approvals, or going through much more complicated hoops. So building approvals are really just the first stage of a multi-phase cycle.
Yeah, look, that's right, Michael. But there's no doubt that we're behind the eight ball in terms of development, and it's interesting when we look at the level of approvals over the year to date versus the previous year. That those strong markets, well, particularly Perth, is surging ahead in terms of comparative building approvals for both houses and units. Plenty of demand there in Perth. That's a booming market. We know prices and rents have been both going through the roof, and really no sign of easing. And just sort of harking back to the Sydney underdevelopment scenario continuing, Sydney's actually the only capital city which has had fewer houses approved this year to date versus the same period last year. So it's where everybody else is improving, all the other capitals are improving in terms of house approvals. Sydney's continuing to track backwards, Michael. So and that'll, I guess, only reinforce the high price nature of that Sydney market going forward. But they certainly have some significant constraints in regard to development. But when we look at the big picture and sort of put it all into perspective, we've seen a fall of nearly 38% in approvals for houses in the capital cities since the 2016 peak, and that's a big fall, Michael, and certainly explains one of the key factors why we're seeing higher rents and prices in capital city markets. And it's really been about the unit market that's fallen over that period in capital cities, down nearly 60% since the peak in 2016. We approved on the annual basis, and this is the annual trend, over 110,000 in that 2016 annual trend model, and now we're just down to 44,000 over the past year have been approved, Michael, for units, and that's capital city unit development. And as we've seen with the latest data, there's just no sign of relief coming forward, for units. So that'll continue to fall. And as you said, there's a much longer development timeline for units, and probably even fewer in terms of the proportion of approvals that actually become completions for units versus houses.
Well, we know that the housing crisis we're experiencing hasn't just happened overnight. It's developed over many, many years, maybe even decades. Sure, it was accelerated through the pandemic and the challenges with that, and now with the increased immigration. But the government said, okay, let's now build 1.2 million dwellings over the next 5 years. There's no way we're going to achieve that. So I guess that's going to underpin our housing markets. The supply and demand ratio is going to be that we've just not got enough supply. That's also going to underpin rental growth as well, because most people still want to live in our 5 big capital cities.
Yes.
And in general, in the same places in those capital cities, Andrew.
Yes, there's not much hope we're going to meet the government's targets. And of course, government doesn't build houses themselves. They facilitate infrastructure, provision. And so, I mean, it was a heroic aim that which would mean over 200,000 a year
Yeah.
to be actually completed. But at the moment, we're approving around about 600,000 a year. So, and that's approvals. And as you said, that won't necessarily translate into completion. So, not much hope at all of getting that target up and running. Given, as I said, and as you said, those 5 capitals are where we congregate around. A lot of them are looking at signs, particularly Sydney, are being actually built out, Michael, and no surprise.
Now, we're obviously interested in what's happening to our economy and
Yes.
how that's going to affect interest rates. And there's no doubt that some people are hurting. The cost of living's gone up. And even though inflation's falling, that doesn't change the cost of living. We're actually where we are now. The cost of living doesn't fall as the rate of inflation falls. Everything seems to be costing a lot more. But some people are still out there spending, Andrew. The latest retail sales figures showed that some people have got enough money in their pockets.
Yeah, it's interesting, Michael. There's been a lot of speculation with higher interest rates, of course, over the past couple of years that it would have an impact on retail sales, and a number of commentators have suggested that was imminent. We just haven't seen anything to support it. In fact, retail sales have continued to rise and rise again. They did over August, up by 0.3%, and now up 3.1% over the past year. And that followed a rise of 0.1% over July. And retail sales still remain significantly higher than where they were in the pre-COVID period. And are still tracking, as I said, they're higher than where they were a year ago. Now, of course, we have some contingencies, because what we're doing here is measuring the value of retail sales. So there's other factors other than just people spending that's driving higher retail sales numbers. And of course, inflation is one of those factors that pushes up the value. And of course, we've got more people coming into Australia, as you mentioned. So there's actually more people in our marketplace, our retail marketplace. But even accounting for that, these are still reasonably solid figures, Michael. And when we look back to that pre-COVID period, our rate of retail spending is still around 40% higher than where it was pre-COVID. So we can't just put that down to migration and inflation over that period. So it's still a sign of, obviously, a vibrant economy. And we know the other factors support that, such as strong wages growth and still a low unemployment rate, and plenty of confidence out there. And of course, we know the housing market's been particularly vibrant over the past 12 months, and some markets are still in boom time mode. So all these factors, mean that higher retail sales are no surprise, and those, revival and strength in most of the housing markets certainly give people the confidence to get out there and spend.
I just wanted to remind you that this is not specific investment advice, because we don't know your personal circumstances, but we're more than happy to have a chat to help you take advantage of the opportunities the current property markets are offering. So why not have an obligation-free chat with one of the wealth strategists at Metropole to discuss your goals, your options, and what you could do. We're much more than just another buyer's agent. We help you safely create intergenerational wealth through strategic property and wealth advice. Remember, property investment's a process, not an event, so you can't just go out and buy any property and hope to be successful. In fact, now more than ever, getting the right advice is critical. So if you're looking to invest in property or buy a home, go to metropole.com.au and organise a time for an obligation-free chat. You're going to find that at Metropole we're big enough to tip the scales in your favour, but still small enough to care. And since we don't have any properties to sell, our advice is independent and unbiased. Well, it's springtime. The auction markets are busy at the moment. In fact, after a bit of a break with school holidays and the various grand finals, a few more properties have come onto the market for auction. How has the market coped with the extra depth, all those extra properties there?
Yeah, well, Michael, we've sort of moved into the mid-spring market now. We've got the football finals, the long weekend holidays that we've had. Still some school holidays around, but and they'll they'll move past the distraction phase over the next weekend or two. But we did see a real surge in auction numbers at the weekend, and this has been a clear factor in our auction activity this year, Michael, is we've seen record numbers of listings in the auction market as sellers, I guess, having regained confidence, have moved back into the market, and we're just seeing no sign of that slowing down with another big weekend in terms of numbers. We did see some markets with the clearance rates just falling down slightly, but I think in regard to the number of properties that were offered, that it's more about a little bit more offers, a little bit more properties on offer for buyers, and a little bit more competition amongst sellers. But still, the clearance rates were quite reasonable. And I think that when we put it all together, the actual number of sales is very strong for this time of the year, or compared to the same time last year, even though the same time last year was certainly a market where we had, still had those higher levels of buyer activity. So if we looked at just sales, auction sales, we're still tracking along quite strongly, even though clearance rates in some of those markets were down slightly. But 1,052 auctions in Sydney, Michael, of course,
That's
well ahead of the previous weekend.
That's a lot, Andrew, isn't it?
It is a lot, particularly compared to the previous weekend, which was, of course, a public holiday, a long weekend, the Monday. So it gave us that long weekend holiday, which we had just 461. But clearance rates were basically the same. So, given a real flood of auctions into the Sydney market, clearance rates actually held, Michael. But as I said, if we looked at sales numbers, the sales numbers are actually well ahead of where they were a year ago, where we had a higher clearance rate, 73% result. But auction numbers were well down, 738. We've seen this all year, where weekend year-on-year comparisons have been well in favour of the number of a significant higher number of auctions being conducted this year compared to last year. So I think another quite a positive result there for Sydney. Sydney's moved away from those 70% results, which we had through the early spring period. But nonetheless, we can perhaps speculate that higher numbers of listings are just testing buyer depth at the moment. Melbourne, another big weekend of auction numbers for Melbourne, 1066 auctions, and Melbourne clearance rate down a little bit to 60.7%. We're still not seeing that, I guess we could say, long-awaited revival in prestige property in Melbourne, Michael. That higher price property in Melbourne has really been dragging the chain over the last few years. And this time of the year is usually, the mid-spring market is usually where that part of the market is very active. That inner east, inner south, and inner city market is very active, but we're just not seeing it at all at the moment, Michael. It's still those, particularly the outer eastern suburbs and the northern suburbs of Melbourne, that are certainly finding buyers, continuing to find buyers. But we just haven't seen that revival with prestige property in the mid-year or the mid-spring auction market. Big auction numbers in Brisbane, 160 auctions, down a little bit again. Brisbane's been a little volatile with its auction results over the past month, but certainly 160 auctions is up there in terms of high numbers of high levels of auction activity, and miles ahead of where it was a year ago when we do those comparisons. Big weekend in auctions also in Adelaide, 121 auctions in Adelaide. Another strong auction clearance rate, 75.8%. And Canberra, following a public holiday weekend, the previous weekend, big numbers, 100 auctions conducted in Canberra. Another bad result there for Canberra, 57.4%. So maybe we're starting to see, again, signs of a revival in that Canberra market. But these were very, very big numbers of auctions, Michael, right across the board. And some of the markets obviously had an easing in clearance rates, particularly that Melbourne market. But as I said, I think it's, market sectors that are responsible for Melbourne. But I think overall, really, these are, quite positive results, given the number of auctions out there. And I don't think there's any sign of really weakening demand in the face of what is a real surge in auction activity.
Well, you mentioned that there isn't such strong activity at the upper end of the property market, particularly in Melbourne. And I've found that over the years that really has to do with businesses being more successful when the economy is doing well, when businesses are doing well, when people are getting dividends from their businesses. They feel more confident about moving their homes. So currently people are comfortable staying put. It may take some time for consumer confidence to return to Melbourne, for the auction market to return. But we'll be back each week to discuss the auction results, plus all that's happening in our housing markets. Thanks for your time today, Andrew.
Yes, thanks very much, Michael.